Did you know that every single option trade is powered by a hidden force? The force is called as underlying asset. The unsung hero behind every call, every put, and every price movement you will see in the option chain. Let's make it relatable. Think of option trading like a cricket match. Even the greatest batsman can't win alone. He needs a solid team backing him. Similarly, no option strategy can succeed without first understanding the underlying stock. Today we are going to unravel this mystery and discover why underlying asset is truly the heartbeat of option trading. So what's exactly the underlying? In simple terms, the underlying is the asset, just like a stock, a bond or an index that the option contract is based upon. So for example, if you buy a call option of Infosys, the underlying asset is Infosys stock. So whenever you are trading the option, you are not actually buying the stock. You are betting on the price movement of that underlying. Let's break it down even further. Imagine a pizza. The full size pizza is, let's say, Reliance Industries. One slice of pizza is one Reliance share. When you buy a slice, you own a part of that pizza. So when you buy a Reliance stock, you own the part of the company. But when you are trading an option, you don't own the stock. You simply make a bet whether the price will move up, it will move down, or it will remain sideways. Just like predicting how a cricket match will perform in tomorrow's match. You are not eating the pizza. You are betting whether it will be hot, spicy, or whether it will be delivered on time. Now, let's reinforce what you have learned with a quick quiz. Question number 1. What is the underlying asset in option trading? Option A, the stock on which the option is based. Option B, the trader who buys the option. Option C, the brokerage firm facilitating the trade. Or is it option D, the price at which the option expires? And the answer is option A, the stock on which the option is based. Question number 2. How does the underlying asset impact an option's price? Option A, it has no impact on the option price. Option B, it determines the option's movement based upon the price and volatility. Option C, the option price is always fixed regardless of asset. Or is it option D, it only affects the option on the expiry day? And the answer is, you guessed it correctly, it's option B, it determines the option's movement based upon the price and volatility. Let's go to question number 3. If you buy a, let's say, Reliance option, what is the underlying asset? Option A, the entire Indian stock market. Option B, Reliance stock. Option C, the stock in the same sector. Or is it option D, futures contract on Reliance? And the answer is option B, Reliance stock. Question number 4. Why do traders focus on the underlying assets in the option trading? Option A, to predict the price movement and volatility. Option B, to buy the physical share instead of options. Option C, to avoid risk completely. Or is it option D, the only trade in the cash market? The answer is option A, to predict price movement and volatility. And last but not least, question number 5. What is the key difference between trading options and buying the underlying stock? Option A, option traders own the stock while stock buyers do not. Option B, option traders bet on the price movements without owning the stock. Option C, options have no expirations while stock do. Option D, stocks are riskier than options in every case. And the answer is, yes, you guessed it correctly, it's option B. Option traders bet on price movements without owning the stock. Share your scores in the comment. I'll personally check them and guide you on your progress. If you found this valuable, Share it with someone who needs it. Let's grow together. See you in the next learning video. Until then, keep learning, keep winning.